Welcome back to Lam's Cryptoverse. The other day I talked about why I thought Bitcoin could go a lot lower, and I mentioned derivatives, but I wasn't specific enough. I mentioned that a lot of data looked bullish, but not the leverage type data, the derivatives data. And I want to give you some charts to explain better what I was talking about. First of all, I did mention yesterday about the put to call ratio. It was low for Bitcoin and very low for Ethereum at an all-time low. So that's bearish. From a contrarian point of view, that's very bearish. But today I just want to focus on futures. And so let me minimize myself and go to the screens that I'm talking about, CryptoQuant and other ones like that. Let's get them here. Okay, the first one I wanted to talk about was, like I said, CryptoQuant shows that open interest is declining, and you can see my pointer here, right? It's declining. It was almost 16 billion, and now it's down to 8.5. It's basically down 50% from the high, which looks bullish. But then, if you go to the top right here and you look at leverage, it's been increasing. Right? It's at an all-time high. So how could that be? And is that bullish or bearish? Are those people long or are they short? If it's short, it's a good thing. That means that everyone's sitting on the short side and we can make an up move. But I'm sorry to say, I think these people are long, and here's why. Well, before I go to that, I just want to show you Glassnode shows you all the futures open interest from each exchange. And so the largest one is Binance, and then there's OKX, Bybit, FTX, CME, and Deribit. Deribit is a great place for getting information. They put out a lot of free information on options, and it's quite technical and quite good, like the skew ratio, implied volatility, the put to call ratio. And another thing I want to mention is that FTX is growing quickly, and they might be a top one or two exchange, and then Binance is number one. Binance US, they're doing really well. And in Coinbase, as you can see, is not here. They should be here, but I guess because they're more conservative and retail based, they're not on as a top futures player. I don't even think they're trading futures, as a matter of fact. But let's go back to what I wanted to talk about, which was this. You see leverage rising, and you have open interest declining. So let's drill down by going to another place. We're going to go into looking at barchart.com, and what this has is a commitment of traders. I usually don't like looking at the commitment of traders reports for Bitcoin and Ether, only because they don't go back too long. But that was like a year ago, but now we're building up somewhat of a history since we started in I guess it was May 2021. So if you see Bitcoin here, it shows you the price of Bitcoin, right? It's declining here until June, and then it rallied up to, here it's a 69,000. I see different numbers all the time. I think the close might have been 66,000 actually. But then we've been declining ever since. But what I want to point out here was on the bottom, these nice colors here. Here, it's called the COTLC. That's commitment of traders, and what we want to see is on the left side here, the commitment of traders report. And if you look at the green here, it says non-commercial large speculators. That's where we want to pay attention to, the green and the red. So we shouldn't even look at the bottom here. I'm going to actually hide that from you here, so you can't even see it. So now you're just seeing what I'm pointing at, which is the green and the red. And the red are the commercial ones, commercial guys, and the green are the large speculators, like the large hedge funds. And as you can see, the low is here, and that was in November, and it's been increasing ever since. So we're near an all-time high as far as back. I mean, obviously the data doesn't go back too long, but the point is that the futures positions are long for speculators. So from a contrarian point of view, that's negative. Again, from a contrarian point of view, when all the speculators are sitting on the long side, that means the opposite could happen, that Bitcoin could decline rapidly. Okay, has it increased sharply? Maybe, maybe not. But let's go to the next one. And this is the last chart I want to show you. This is Ethereum. Let's zoom into 1 year. And now look at Ethereum. It's incredible. The amount of longs has increased dramatically. And we hit an all-time high. And just recently, a few weeks ago, early August, we hit an all-time high. And we're still near the all-time high. You see the contracts here. 15,000 versus, it was 23,000, but it's still high. So the long contracts have declined a bit because of Ether's decline in price. But basically, all these contracts were being built up on the long side by speculators, i.e. hedge funds, crypto hedge funds, because, as you know, everyone's bullish on the September 15 merge event of Ethereum. So if that doesn't go well, or even if it does go well, I think we could see a dramatic decline in Ethereum. And where to look? You have to look at Bitcoin. If Bitcoin declines even a little bit, you'll see a large decline in Ethereum because there's been so many long call options, right? Everyone's been buying call options, and hedge funds have been buying long futures in Ethereum. So that's all I want to tell you. I just wanted to make this an addendum to the previous on-chain technical indicators that I put out the other day that talked about how low can Bitcoin go. And I highly recommend you look at that because it's chock full of lots of charts, and you really get a good feel of like what's going on, how are people positioned, within not just Bitcoin, but the whole crypto market. Well, that's it, everyone. Be safe, be careful out there. It's going to be a difficult trading environment, I believe, until around October. Though that's a key month for many reasons. Number one, on the equity side, and we know that Bitcoin and crypto overall is joined at the hip of the stock market. So I think the stock market is going to be very volatile. And on the downside, around September, October, I can't give you the exact date, obviously, but these are seasonally weak points in time for the market. You can go back, get your almanacs, your stock almanacs, and they all show that there's a lot of weakness that occurs, especially in September. And if it's not September, it's going to be October. You remember the crash of 87 was in October, and there were many crashes around that time. So just be careful out there. But you know what? Maybe I should stop being negative all the time. How about we look at the positive side? Once we get through this tunnel, again around third, fourth quarter of this year, I think the Fed's going to pivot and they're going to stop raising rates, and then long duration assets are going to rise, and that includes tech stocks, more specifically software as a service stocks, cloud stocks, right? SPACs. And of course, crypto, because crypto is the longest duration asset and perhaps the most speculative asset. So that means when a Fed pivots, it's going to have the largest gain. So there is something to look forward to in a not too distant future. So thank you again for joining us at Lamb's Cryptoverse. And don't forget to like us and subscribe to us. Bye-bye.